1. Balance sheet. The balance sheet is prepared by listing all the assets, liabilities, and equity of the company at a specific point in time. The balance sheet is organized in the following format: assets, current assets, non-current assets, total assets, liabilities, current liabilities, non-current liabilities, total liabilities, equity, share capital, retained earnings, other equity items, total equity. The values of the assets, liabilities, and equity are based on their historical cost, except for certain assets such as marketable securities, which are reported at fair value. 2. Income statement. The income statement is prepared by listing all the revenues, expenses, gains, and losses incurred by the company during a specific period. The income statement is organized in the following format: revenue, cost of goods sold, gross profit, operating expenses, operating income, other income and expenses, income before tax, income tax expense, net income. The values of the revenue, expenses, gains, and losses are based on accrual accounting, which recognizes revenue when earned and expenses when incurred. 3. Statement of changes in equity. The statement of changes in equity is prepared by listing all the changes in the equity of the company during a specific period. The statement of changes in equity is organized in the following format: share capital, retained earnings, other equity items, total equity at beginning of period, additions, deductions, total equity at end of period. The values of the additions and deductions are based on the actual transactions that occurred during the period. 4. Statement of cash flows. The statement of cash flows is prepared by listing all the cash inflows and outflows of the company during a specific period. The statement of cash flows is organized in the following format: cash flows from operating activities, net income, adjustments for depreciation and amortization, changes in working capital, cash flows from operating activities, cash flows from investing activities, purchases of property, plant, and equipment, proceeds from sale of property, plant, and equipment, investments in other companies, proceeds from sale of investments, cash flows from investing activities, cash flows from financing activities, issuance of debt, repayment of debt, issuance of equity, payment of dividends, cash flows from financing activities, net change in cash and cash equivalents. The values of the cash inflows and outflows are based on actual transactions that occurred during the period, and the adjustments for non-cash transactions such as depreciation are made to reconcile the net income to the actual cash flows.